associated with the issue of currency. Now, when the dollarization started declining, people said, where should we shift? And that is when they started shifting to other currencies or to other commodities. So they went into petroleum products, and that's why petroleum prices rose. They went into food, so food prices rose. They went into other commodities, so other commodity prices rose. And that's why we had the inflation of the last 2 years, okay, because of this rise. But what it meant was funds were not going back into the US. And when funds are not going back into the US, this chain, this financial chain that was created by investment and reinvestment, that started falling. That is when these entities said, we must create these subprime assets. So the subprime assets were not only in the housing mortgage market, but they were also in the credit card market. Even in the case of credit card market, you must have noticed that the US banks and US entities started lending to those people who had defaulted on their credit cards. Why? Because you could earn a higher return from those people who had failed. Okay? And the idea was that we would recover somehow. Okay, those people who are being lent on the housing mortgage market, what were they told? Why do you worry? Housing prices are going up, and if suppose tomorrow you can't pay the installment, you sell it, and then you'd make a capital gain and you can repay it. But this game failed, like a Ponzi game fails. Why? Because the housing market, having peaked, started declining from 2006 onward. Okay, and therefore, when the market starts declining, then there has to be a default, because you cannot recover your money. So if you were on the verge of default and you went to the market to try and sell it, you found that your equity was lost. Okay, so this subprime market was created so that you could have a larger asset base to create more and more of the financial assets. Okay, but that was precisely the reason why actually the housing mortgage market also started collapsing. Therefore, the creation of this subprime market and its decline was because of the other problems in the real economy, the reduction of the dollarization of the world economy, etc., etc. All that was creating it, and all that was also the cause of its decline. Okay. So therefore, all these reasons is what then led to this. That's what I've listed here. What I've just mentioned, all these tax havens and various other things. Okay, and that's what resulted in the creation of the subprime asset crisis. Now, what happens in a crisis? What happens in a crisis is that this bubble that is created, the huge financial bubble, you can see the world economy is about $65 trillion, but the total assets in the financial markets are anything between $600 trillion to $1,000 trillion. Okay, so the financial assets are more than 10 to 15 times what is there in the real economy. Now, even if you have to pay on $600 trillion a 10% return, that means $60 trillion, which is equal to the size of the world economy, and you can't pay it. Okay? So either it becomes a self-fulfilling cycle that I earn profit in this sector and I reinvest it back. I earn in it and then I reinvest it back. Either I do that or it's going to collapse the world economy. And that is precisely what has set in, that this financial markets, they could not afford the returns that had to be paid on this huge amount of creation of the financial assets. Okay, and that is the problem, because of which the transactions cannot be reversed in an easy way. You see, you can ask the question, if the bubble could grow in an orderly fashion, why does the bubble not decline in an equally orderly fashion? And that is because of the interlocking balance sheets of the various institutions, the asset side collapsing but the liability side remaining unchanged, and that's why you cannot reverse it in an orderly fashion. And that's why the whole market functioning has become very disorderly. The collapse has become very disorderly. And that's why when the governments intervene, governments are intervening by $1 trillion to begin with, then $2 trillion, then $4 trillion, now $10 trillion. But the collapse of $600 trillion by 40%, that's $240 trillion. So how do you control $240 trillion of collapse by putting in $5 trillion or $10 trillion? Okay, the entire amount that the governments can put in, okay, is nothing compared to the kind of collapse that is taking place in the financial markets. Okay, and that is why governments are not succeeding. So what has happened as a result is you cannot reverse the transactions. What was taking place, you cannot reserve in an equally orderly fashion. Okay, let me skip a few of these. Okay, but the last point is important. As trust breaks down in the financial system, the financial multiplier F, which I talked about, that almost goes to zero. The gearing almost disappears. Okay, so the de-gearing, as the term is used, de-gearing is taking place. and the money multiplier becomes almost 1, because whatever money liquidity you get, you don't advance it further, and therefore borrowing and lending has fallen. So money multiplier, which in the Indian context is 7, has fallen to 1. In the international context where it was 5, it has fallen to 1. Okay, and that's why government intervention is ineffective. And when you cut interest rate and hope that investment would rise, investment would not rise, because you are in a kind of liquidity trap. Okay, this is a technical term that is used, that you are in a liquidity trap when interest rate falls, don't lead to higher investments. Okay, and therefore don't generate higher demand. And that is why governments are becoming very, very ineffective. Okay, and that's why there's some more technical things. I'm just skipping that. So this is the thing, that in brief, there's an asymmetric situation, okay, between when things rise and between when things fall. And that's the thing to note, that, okay, now the US financial crisis is affecting the rest of the world economy. How is that happening? The financial markets are linked to the real economy. So financial markets, when they begin collapsing, it has an impact on the real economy, and that is showing itself up. Exports have slowed down the world over. Economies have gone into recession, investments are collapsing. Okay, so when investments collapse, output falls further. Okay, so therefore that cycle is there. Large number of people are losing jobs. In the US economy alone, in the last 10 months, 1.5 million jobs have been lost. In India, as Kamal Nath had announced in April, 2 million export sector related jobs had been lost by April of this year. And many more jobs are being lost. Every day you are getting more and more stories of jobs being lost. And this is happening the world over. Now when jobs are lost, demand falls even further. Okay, so the collapse accelerates. As more and more jobs are lost, then the demand falls further. And the sectors that are affected, which are obvious: construction, retail industry, real estate, financial services, consumer durables, automobiles, housing, aircraft industry, hotels, travel industry, etc., all are being hit. So it's, in other words, huge segments. But you'll always find some examples of somewhere where things are better. Okay? So for instance, hospital industry will do well. All right? People will fall sick more. As you know, in Bombay, the sale of antidepressant drugs rose by 30% in October. Okay? Maybe astrologers will do well. Everybody would want to go and show their hands. What are the prospects? Huh? Okay, so there'll be some such crisis industry. Like somebody is telling me in the morning, shipbreaking industry is doing well. Why? Because shipping tonnage has fallen suddenly. So old ships are now being mothballed. So Alang is doing very well. So all the crisis related industry will do very well. All right, but if you have some crisis-related industries doing very well, but the bulk of the economy, whether it's General Motors cutting back, whether it is, Tata Motors cutting back, whether it's Tata Steel, Tata Chorus, and you're shutting down plants for 3 days or 5 days a month, etc., etc. So you see the major and big industries now facing crisis, even though some examples will be there where things may be a bit better. Okay, corporate profits have fallen very sharply. And in China, the report of corporate profits falling goes back to February. It's not that the corporate profits have started falling in China today. Corporate profits have started falling much earlier. Okay, and that's always a sign of heading into recession. Okay, countries with large foreign exchange reserve like China and Japan have lost heavily. China probably has taken a $500 billion hit in its reserves. Its reserves, as you know, had crossed $2 trillion. Japan, with reserves of $1.2 billion, has taken a hit of about $300 to $400 billion. So that's why China is now saying we must de-link from the dollar. Okay? Because only we de-link from the dollar, then only will we be able to prevent the collapse of our reserves. Otherwise, this is a loan that we have given to the US economy, and that is now collapsing. I've already mentioned to you that smaller nations like Iceland, Ukraine, etc. are in deep trouble. Now, every entity in this kind of an uncertain situation goes liquid. You don't invest. Okay, you go liquid because you need to have money to face the uncertain situation. So everybody is now holding greater liquidity. As a result, speculation in petroleum, speculation in commodities, etc. suddenly declined, and petroleum prices, which had reached about $150, have now collapsed to about $50. Okay, this is the reason why there's a fear of deflation. So from a fear of inflation in June, now there's a fear of deflation starting as of October. So many people are worried because, as I said earlier, if you have deflation and prices begin to fall, then people postpone consumption, people postpone investment, and therefore the collapse becomes even greater. Okay, so the fear of deflation can actually lead you into a depression. Okay, and that depression is a very dangerous thing, because once you are into depression, then coming out of that becomes even more difficult. Okay. Now,